Good afternoon, everybody. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. That was a yawn. Position disclosure. I'm out of my path long. I'm out of my S long. I got to my targets. I almost got out of Intel today. Didn't quite get there. I got out of my NVIDIA short, stepped out of that, and I added AIFF short. Oh, crazy day again. We got a bunch of stocks that are reporting earnings here. Yeah, I want to see what's driving down this Coinbase because initially, I guess it's back up now. It's back up to where it closed. But the numbers look good to me. Crushed EPS. They crushed net income. They crushed trading volume. They beat on subscription and services revenue. There's no guidance in here. They didn't just beat on every number that I'm seeing. They crushed on every number. Unless there's a guide out that I'm not seeing. Coin now trading up a bit, but that was weird. They traded up and then they traded it down kind of heftily, and now it's back up. So I wanted to have a quick look on that one. We have Airbnb out, which is up massive, despite a revenue guidance miss. EBITDA margin's a great beat. Fourth quarter revenue is a great beat. Adjusted EBITDA is a solid beat. This is also, I mean, and they absolutely crushed fourth quarter EPS, 73 cents versus 59 cents expected. They crushed everything, but they missed on rev guidance, which is usually the most important number for a stock like this. So I'm not surprised to see it trading up, given that they crushed all those numbers. But I'm surprised to see it up as much as it is, given the revenue guidance miss. Yeah, maybe on Coin it was just how much it was up on the day into the report, and they were expecting a beat after the Robinhood crushed on its crypto for today's trading session. We have Roku up. Roku crushing it. Crushed their 2025 EBITDA guidance. This company still loses money, but they crushed the EPS. The loss was 24 cents per share versus estimates of 40 cents per share, so they're still losing money, which I'm actually surprised to see, but much better than expected. Q1 adjusted EBITDA guides a miss, but Q1 gross profit's a really nice beat. This is a report that looks pretty good to me. Looks pretty good. I'm just gonna leave it at that. Not like super fantastic, but pretty good. And we got Palo Alto Networks out. Here's one that's actually trading down. I thought only stocks go up. Palo Alto Networks. Beating on their fiscal year EPS guide. Guidance expectations a nice beat. You see their third quarter revenue kind of in line with expectations. Okay, so we got Palo Alto trading down. They beat on their second quarter revenue. They beat on they missed on their second quarter EPS. Yeah, so the Palo Alto looks fairly mixed to me. So they're trading it down. We got GoDaddy. I don't really look at this one too much. GoDaddy trading down. We got Twilio trading down as well. So some interesting ones. DraftKings out. DraftKings crushed. Crushed in a good way. Up. They see their 2025 revenue pretty in line. Why is this up so much? The fourth quarter loss was greater than expected. They lost 28 cents per share versus estimates of 19 cents per share. Their yearly revenue guide's in line. Fourth quarter adjusted EBITDA beats, EPS beats, average revenue per MUP. I assume that means like the user is a beat. They're unique players. It's interesting that they call them players. They're gamblers. Small beat. The DraftKings report doesn't look fantastic to me. Like, not enough to be up this much. They're guiding revenue in line, and that loss per share miss is nasty to me. Some of the other numbers beat, but I'm a little surprised to see DraftKings up as much as it is. All right. Anyway, let's jump into our analysis of the day. So the market is flying, totally breaking out. SPYs are right into the upper band of resistance at 610, upper percentage point on the day. Qs totally broke out through the 530 resistance zone that we've been talking about. So these Qs are now looking solidly bullish. The IWM was able to recapture 226 by 15 cents, closing up 1.1%. So Russell still has some work to do, but let's have a look at our daily charts here. Click. There we go. Yeah. So this triple these little lower lows that people have been calling out in these SPYs have now broken out to the upside. So that's looking good for bulls. We closed right near the upper band of the resistance area, where if we really start to close above 610, it's hard to say that this market's not looking full out on bullish. And then we could go into that circumstance I described where we're breaking higher that leads to a feedback cycle of buying. I would keep in mind that it's still right in front of a seasonally weak period, but we're still right now in the last leg of the strength. But from a technical perspective, this market's starting to look real good, real bullish. Technically, with a close still below 610, I would say we're neutral bullish and not quite full-blown bullish. But the Qs with this close here, pretty much full-blown bullish. Total breakout through the 550 resistance zone, closing above 532, closing at 535, getting above these late January highs as well on a closing basis. Qs just went to full-on bullishness. And the IWM, by 10 cents, is out of neutral zone and into neutral bullish zone. So bottom line is today was a huge win for the bulls. SPYs, very, very close to breaking out to full-on bullishness. Qs, full-on technical bullishness. IWM, neutral bullish. So we're looking good for the bulls out there, technically speaking. Total break higher. Why do we break higher today? I have no idea. Hot PPI today after a hot CPI yesterday. Ooh, it's dumping snow out. Hot PPI today after a hot CPI yesterday. PPI never matters as much to the market as the CPI does, but we've definitely seen periods of time in the past where after getting a hot CPI, then you get a hot PPI, and it just like has an add-on effect of creating additional weakness after the hot CPI. One of the things I talked about in the morning meeting today was just how we need to keep in mind that markets evolve. I've seen this happen over the course of my career many, many, many times, where some sort of economic number that was previously a problem is no longer a problem, or even flips in the other direction, or especially with interest rates. I've seen over the course of my career periods of time where higher interest rates means that the market goes up, higher interest rates means the market goes down, lower interest rates means the market goes up, lower rates means the market goes down. That's not like a fixed thing where you can always point to and say higher interest rates make the market go down and lower interest rates make the market move up. It's not always that way. It's always about the context around that interest rate move. And it's kind of the same thing when we are talking about these economic numbers. So if you gave us a CPI that was as hot as expectations yesterday, followed by a PPI that was as hot as it was versus expectations today, if you gave us those two numbers back to back at almost any other point in the past 3 years now, it would have crushed the market. That's what we saw very consistently. Yet this time around, we saw a hot CPI come in yesterday, and the market did initially trade down, but basically traded all the way back to flat. And then followed by a hot PPI today that helped cause the market to break out. There's obviously other moving pieces that are going on right now that traders are pointing to, such as the Russia-Ukraine peace talks that are ongoing, which would have some benefit to the market and potentially help bring oil and natural gas lower because maybe Russia becomes allowed to export them again, though I talked to my buddy who lives in Singapore and actually is involved in the transport of oil. He tells me that primarily the main oil that he's been seeing going through the ports in Singapore is illegal Russian oil anyway. But at least on the surface of things, it would make it easier for them and bring those prices lower. So that's obviously a help to the market. The Trump tariff retaliation tariffs again today. Once again, I turned into kind of much ado about nothing. Basically announcing that he's going to do these retaliatory tariffs, but not until April. So, when he postpones things out that far, just with the way that the administration has shown us that they talk and how quickly they change their mind and how quickly they change things. When you tell me that something's going to happen a month away, which isn't very far, or even as further down the road to April, then it just is what it is. It's almost meaningless. So that didn't go through, and potentially there's even a little bit of a relief bounce once again off of that, where the threat of tariffs. We all know that actual tariffs are bad for the economy. So the threat of tariffs creates that expectation that maybe weakens the market a little bit. And then when that threat doesn't follow through, because it never seems to, then the market gets a relief rally off of that. I would argue, though, that no one's really selling the market on the threat of tariffs anymore anyway, because, well, every single time he has shown us that he actually doesn't follow through on what he says he's going to do with it and is just using it as a bargaining chip to get other things done and is never actually, implementing them. But that also could be a reason for a relief rally. So, some ongoing things with the administration that seem to be helping the market with tariffs in Russia and Ukraine. At the same time, hot CPI, hot PPI just being completely ignored by the market. Why? A little bit difficult to say. Ryan here on the team gave us a research note this morning that postulated that with the Fed already basically set to give us, 1 to 0 cuts this year, those hot numbers coming in, they don't reduce the probability of cuts any further. And what I was saying in the morning meeting today is at the same time, I don't think that those numbers were hot enough, and it was just one data point for the Fed to all of a sudden be talking about hikes again. So you're not worsening really the interest rate picture from the Fed perspective with this hot CPI or hot PPI right now, because it's already pricing in nothing, and no one's even beginning to talk about the concept of hikes again if inflation really picks up. The other thing that I mentioned maybe, but it seems a little bit far fetched to me, is if you read Pat's note, which summarizes some of Charlie McElligot's latest work, he talks about the potential of basically a growth scare coming into the market, maybe closer towards the spring, maybe an April period of time, and the reasons why he postulates that are potential of rising unemployment because you're letting go of so many government workers and the impact that could have on the economy, combined with a couple, potential of actual tariff impacts having a lagging effect, assuming that they ever actually get implemented, and the potential of the deporting of immigrants, reducing that layer of the workforce. So basically, those things combine, potentially creating a growth scare. And I was saying, if anybody was worried about a growth scare, well, you'd have a growth scare kind of running into hot CPI and PPI, so maybe they can even actually weigh each other out, so that makes the hot CPI and hot PPI not as bad. So bottom line is you kind of combine those things together. The fact that we are still at the tail end of a seasonally bullish period of time for the market with some strong underlying demand in combination with tariffs being further delayed and not going through, in combination with positive talks about ending the Russia-Ukraine war, combined with the fact that maybe a hot CPI, PPI doesn't matter as much right now, and then all of a sudden you get a technical breakout in the market. Just a lot of incredible strength, and that's pretty much where we're at. So the bottom line is, it was kind of an interesting day for me today, because most of my best names actually were on the short side. I made money today decently on most of my shorts. This AIFF, which I know it's a crazy name in play, was my best name of the day. That's a short. I ended up positive in Palantir short today. I ended up positive in OKLO short today. Traded really well. I ended up positive in MSTR short today. I ended up negative in Meta short, but by like a very inconsequential number. And I did lose money on this TQQQ. But that's kind of interesting, like that today was as strong as it was, and I've got these shorts on, and actually some of my best P&L is coming from those shorts. At the same time, my long swings were generally positive, but more mixed. I got some long swings that were down a little bit today. I've obviously got a bunch that were up today as well. So for me, it was a little bit of a weird trading session. I almost would have expected myself to endure more pain today on a breakout and have to stop myself out of more things. I did stop myself out of what was my smallest short swing from 2 days ago, which was NVIDIA. I did stop myself out of that. But everything else, I'm like, the market is proving to me now that it's starting to break out. And what did I say yesterday? I said yesterday that let the technicals really tell the story, and if the technicals show that they're breaking out, they could lead to a feedback cycle of buying that comes into the market. So make sure that you're, willing to stop yourself out on those shorts, and you're willing to scalp those longs. Even if you have a short thesis, you could be wrong for a period of time before that works. Or even if you have a short thesis and the technicals are breaking out, you don't want to be stuck short when the market is breaking out. Exit the short, and you can always re-enter when you get the signal that tells you that's confirming that your idea or your thesis is correct. So I kind of would have thought that if you showed me like today's daily candle yesterday afternoon, I'd be like, oh man, what that means is going to end up getting stopped out of a whole bunch more of my shorts. And interestingly enough, not only did that not happen, I actually made money in most of them. So if I'm positive in them, even if the market isn't looking so good for shorts technically right now, I might as well keep them. So that's kind of what I'm continuing to do. And then on the longs I have, the ones that are moving in my favor, I just kind of continue to piece out of them a little bit on the way up. And like I said, I exited my S position today. I exited my path position today. I almost exited my Intel position today. I still have a very small long. I'm out of most of it now. I'm not going to rush to get back into the longs that I am liquidating. I'm probably just going to be a little bit patient on that. Yeah, I mean, bottom line here is that the technicals of this market are starting to look really good. The SPYs have almost broken out. The Qs have broken out, and the IWM is barely back in a neutral bullish territory. The Russell doesn't look quite as good, to be totally honest. And interest rates, the TLT made a hell of a snapback after yesterday's sell down. Hell of a snapback. So interest rates are able to make their way down today, which is also supportive of the market, or at least it has been recently when that happens. Trying to think if I really have anything else to talk about. I think I covered everything I needed on my end. So I'll just kind of wrap up my part there, and I'll turn it over to you guys for questions. Gotta be able to read it first, Dennis, if you want to give me a second. So let me start on the VTF here. First thing I'm seeing is from Josh. I think things like that happen because real institutional money de-risks into events ahead of time that they can perceive to be an issue, but then when it's not as big an issue as they thought, they have to chase up to put risk back on, like with the tariff stuff. Yeah, so I agree with what you're saying generally for sure there, Josh. I agree with what you're saying there generally for sure. I would potentially just make the argument, though, that they didn't really de-risk that much. Like, if you look at some of the data we saw out of, like, hedge funds right now, they're at, like, the 95th percentile on, I think it was just a one-year look back, but a 95th percentile in terms of long exposure, like, even kind of coming into today. And I would argue that they never really de-risked that much to begin with. There was never really a pullback on any of this tariff chatter to begin with. We had the one gap down on Monday a week ago, and that was bought up instantly that day because the market just didn't buy that they were actually going to happen. So that's that. That's from Josh. Ben asked me to explain the Airbnb report and reaction. I already did. So kind of already did in the beginning of the meeting. So if you missed it, you could just go into the YouTube after and rewatch that. Billy D, what does that tell you? So I guess that the chatter is about, is there a read-through on if you're able to make money on the short side even as the market is breaking out, that tells you that the market's not actually that strong. There certainly can be. Let me read the rest of what you're saying here. The VIX is still an elevated spot. I don't think that's the reason why the shorts work today either. Yeah, definitely part of your part B is the reason why I'm up in those names. I traded them well. I mean, I'm up money in OKLO, but it closed flat on the day. I'm up money on Palantir, it also closed flat on the day. So that kind of just means I traded them well, but they were both obviously weak to the market, which closed up. Qs are up 1.3% right now, and they're actually down a bit off their close. So I do think that there is something to be said on what Billy D is saying about. So what does it mean if the market moves higher, but there is money to be made on the short side? A lot of the times that just means that the market moved higher on bad breath. I actually don't think that was the case today. I also don't think that bad breath is an indicator that a market needs to go lower. The statistics show that it's not. So I'll just jump right ahead to that. The statistics show that in a market that has bad breath, which is not the one we're in right now, that everything else has it as high of a probability as catching up to the leaders as it is that the leaders will fail because they're the only things moving higher. I don't think that breath is a market topping or bottoming signal in and of itself. And again, the statistics that I've seen show that it's not. I actually think it was a really strong market today. It seemed like a lot of things were moving higher. Some things were trading really well. I actually had a lot of long ideas in the morning meeting today that I had written down based on some of the best looking charts that are out there. Like Spotify. Didn't give a ton of follow through, but that was on the list. Docs, this was on the list to go long versus like the pre-market low. It more or less worked. Net, I mentioned because of the bull flag here. Mentioned that it was extended, might need a little bit more time, but with momentum or a strong market, it could go. Guess what? It went. I actually almost wrote HIMS down on my list today, but I thought yesterday's day was a little bit too big, so I didn't add it to my long list. But I had almost, I have like a secondary list sometimes of names that are a little bit interesting, but don't actually make my full list. So, and HIMS was one of them. I almost wrote that down. Um, Robinhood, I had written down kind of, but pulled it away. Rocket Lab, I almost mentioned for like a $30 breakout, but it seemed a little bit far away from that. Uber, I almost mentioned as well this morning. I thought yesterday's day was too big. So I actually had a lot of these strong names on my list today to see if they could give continuation, and for the most part, they all did. What QQQE do today? Out of curiosity. Yeah, QQQE being as much actually up slightly more than QQQ. That really tells a story. We had not seen much of that happen in the last couple years. The last couple years, we were constantly talking about the fact that it was QQQ and nothing else, because it was Mag 7 and nothing else. So it was market cap and nothing else. And QQQE was not performing, or SPY was massively outperforming RSP. The S&P was massively outperforming the equal weighted S&P. Today seemed like a really strong day across the board. And for me, I just happened to have a couple names that were a little bit weaker that I also, in combination, traded well. That enabled me to be able to make money in them. And I think that's it on the read through. If you want to try to make a bear case technically, it's almost impossible to do that until we break through back down through some levels, or we get some sort of actual technical signal. You could try to say that we're setting up for like a false breakout on one kind of final push higher right in front of a seasonally weak period that will take out any air quotes smart money that's been trying to short sell this market or hedge themselves out, and you squeeze them out, and then the real sell-off could happen. That is certainly a possibility. It's not a possibility that I want to trade for until I actually see a technical signal for it. From my experience as a trader, you don't want to be the one that is selling short a market that's in the process of breaking out. If you're going to get a false breakout that shakes everyone out on that upside before the seasonal weakness comes in that leads to actual weakness, then there's no reason to have the shorts on right now and just to be getting smoked on them and hoping. You're better off just knowing, like, for example, the 610 level is so important in the SPYs. Let the market shake everyone out into 615 or 617 or wherever it wants to go. Know the importance of that 610 and short it back through the level after everyone's shaken out. So you're shorting on the way down and not actually shorting on the way up and hoping that your idea is right. That would be the better way to approach that if you're still trying to have an actual bear thesis, by letting the price action actually confirm it and allowing yourself to really short things in the direction in which they're moving. Because the bottom line is that the market's breaking out, and first of all, I think everyone needs to admit it's a really important thing that they are wrong sometimes with their trading. And I can tell you from my experience, the biggest losses I've ever taken in my entire trading career have always been the times when I was so sure that I was right that I didn't manage risk properly and I ended up being wrong. So what I've learned from that experience is, sure, more times than not, I'm right with my thought process and thesis. But guess what? Sometimes I am wrong. And I need to make sure that when I'm right, I make money. But I need to make sure that when I'm wrong, I manage my risk well enough that I'm not actually getting blown out. And that the market will then tell me eventually if I'm going to be right, then I'm going to be right. And I'll have the opportunity to re-enter those positions to be able to make money. Because you certainly could break out of this market that could lead to a feedback cycle of buying. You could get a spot up, vol up move that actually makes a real peak, and you could get the SPYs to go to 625 before that actually happens in a really short period of time on a true euphoric upside move Which then, if we actually ever saw that, we don't see that type of move too often. I definitely remember seeing it a few times over the course of the last few years, leads to a phenomenal shorting opportunity. But in the short run, these market technicals are either already telling us or they're beginning to tell us that you really don't want to be short, and potentially you want to be short-term long to be on the side of that squeeze and be on the side of that break. And then if the short thesis, and I do think that there is a legitimate short thesis to still have. Don't get me wrong on that. And the way that I trade, I have to balance what the technicals tell me versus what my thought process and thesis is. I explained my thought process, I think, pretty concisely over the course of the last couple of days on why I have a bearish thought process. But what I'm always saying at the same time is I could be wrong. The technicals will guide me. I can't just blindly do something because I feel a certain way and then blow up my entire account and then not have a career anymore. I'm better off stopping myself out of positions like I did with NVIDIA today, or I'm getting close to doing with Meta, and then I can reestablish those positions when I actually get the signal that's confirming that my idea and my thought process is correct. So that's what I would kind of say about that. With strong seasonals running out next week, isn't it possible that the shorts are Lucy with the football and the longs are Charlie Brown getting ready to kick the ball? Yeah, I mean, that what you're describing there with that analogy is exactly the concept of a false breakout to further shake out anybody that's trying to short, to further also suck in new longs who buy that breakout, then just to pull the rug to get us back below those levels. It's definitely a realistic possibility, but in the interest of keeping it simple and keeping the technical simple, I think that the move is kind of more of what I described, which is if the idea is going to be correct, the technicals will show us that the idea is correct, and they'll give us the opportunity to execute it, either by shorting a true parabolic move or re-shorting a false breakout. So that's why I was actually also happy. I don't know if it's going to be able, if I'm going to be able to get through it again tomorrow. If tomorrow could easily be a day two. I mean, Brandt said it perfectly, I think, yesterday when he was in the VTF, when he said, if the market couldn't go down on CPI today and we're still in this bullish seasonal period of time, I don't see why or how we could go down on Thursday or Friday. And I kind of generally agree with that statement. And that's why I was so happy that I was able to trade well enough to actually finish positive in most of my shorts today, except for TQQQ, because that enables me to be able to keep them a little bit longer, just in case. Like, the ideal situation for me is if I could continue to hold my shorts without losing money. If you do get the false breakout that leads to a failure, and I don't actually get pushed out of those shorts, then it puts me in a position to make actually a boatload of money. If the failed breakout actually occurs. So I was really, really happy, given the market circumstance, that I didn't get smoked in my shorts today, because then I might have had to, reassess and manage risk, or stop myself out, or reduce size, or whatever, and then have to look for the re-entry, which is always a little bit trickier than if I could just keep the position but not lose P&L on it, which is kind of what happened today. So I'm really happy with that. Thanks, Billy. For sure, Dennis. And yeah, for sure. I agree. I agree with your last statement there, also, Dennis. On you want to pay attention to how well. Like I always say this around earnings season. I didn't yet. Rich, will take a look in a second. I always say this around earnings season. You always want to make note of like stocks that have really good beats but can't go higher. A lot of times that's a topping signal. The opposite's also true also. When you get bad news and the market just continuously shrugs it off and moves higher, that tends to be a very positive technical signal as well. You do want to keep in mind that that's something that can change very quickly though. But where we're at is that the market's doing a great job digesting any perceived bad news and taking in stride any perceived good news. From Rich, will ask you what I asked Pat earlier. Do you normally wait for the candle to close before executing? If not, could you contrast when you would versus when you wouldn't? Cool. So I missed when you asked Pat that question earlier, so I didn't get his answer. I'm sure it was a very wise answer because Pat is so wise and handsome and great. Uh, but yeah, so I think that technically the right thing to do is to wait for the candle to close. I oftentimes don't. I oftentimes anticipate what a candle is going to look like as it's in the process of forming, on how I expect it's going to look when it closes. That's a lot of times what I do. That can be a little bit dangerous because you could be wrong. You could be anticipating that the candle is going to close in a certain way and it doesn't, and then very quickly you're wrong and you're taking a loss on your idea and on your trade. But that is generally how I do it. Though I do think that technically the right thing to do is to wait for the candle to close. I oftentimes don't. The difference as well is I find this trade-off in a lot of ways in trading. If you anticipate how a candle is going to close ahead of time and you're right, you're going to get even better pricing, and it means you're going to get even more money and even better risk reward on your trade when you're right. If you anticipate how a candle is going to close and you put a trade on and it doesn't actually close that way, then you're taking a loss in an area where you wouldn't have taken a loss previously because you wouldn't have executed it because the candle didn't close the way you expected it to. That's the trade-off. So for me, I tend to anticipate more. And you probably even see that sometimes when I call trades out in real time during the day. Sometimes I call something out. I don't have a great example right now looking at the indexes. I know I called out a few trades in the market today, and I honestly don't even remember where any of them were. But sometimes I'm watching a candle form, and I'll like call out the short. I know I shorted the Qs here, but it turned into a time correction instead of a price correction. I call out and execute the short. You'll see me do it before that candle's even closed because I'm like, all right, third bar up. It looks like it's struggling to continue. I'm gonna just execute the short before it even closes. And I remember in this circumstance, I'm pretty sure I literally did that with the 1040 bar today. It ended up closing on high. I was like, uh-oh. And then I was a little bit patient. I got this inside 5 and down. And then I was like kind of flat on the entry point of my execution again. And I was like, okay, let me just watch it a little bit. And it just went sideways. And I was just slowly piecing out as it went sideways and ended up making very, very, very small money on that execution because I wasn't even looking for a full 15-minute correction. I wasn't being as greedy as that on it. So that's a lot of how I do it. Appreciate the question, Rich. I hope that helps. From Ryan, glad you found the Data Trek commentary interesting. I think they publish great stuff. I'll continue sharing it. There's usually a great nugget in there each day. Yeah, for sure. Please do. More information is always better. It helps all of us. From Eli, aside from Meta, Apple, and NVIDIA today, these Mag 7s look so bad technically. Yeah, that's been part of my bear thesis. What are your thoughts on the Qs ripping the way they have when you have names like Google, Microsoft, and even Amazon that had poor earnings or are fading their earnings? Sure. So Apple's improved. Let's get daily charts. Apple's improved in a great way, and I think I even called out a long in Apple in the morning meeting today, though I also said I wasn't going to take it. NVIDIA continuing to hold above 130 looks really good. Meta's been really strong, but still hasn't been able to give any momentum. But then you've got Microsoft, which recovered a bit yesterday, but still does not look good. Amazon, which struggled today, does not look good. Google, giving an oversold bounce, does not look good. Tesla's still an oversold bounce. I don't think it looks good. Part of my initial bearish thought process and thesis was Mag 7 looks bad, but we're in a period of time here where the market's trapped and can't actually break down. So what that means is you get a dispersion effect where other stocks that are in the NASDAQ have to move higher in order for the Qs to stay flat to positive while Mag 7 is trading lower and not looking good. Thought process being once we get into the more seasonally bearish period of time, it can actually loosen the market up a little bit where you don't have to get that dispersion aspect of things again, and then potentially everything can break down and sell off together. That was the whole That was a big part of kind of my bearish thought process, stemmed from how Mag 7 was trading. Now, I would argue that today, if you look at them in totality, you know, Meta, Apple, and Nvidia are looking pretty good. The other four are not looking so good. They're kind of balancing each other out a little bit at this point, and the whole market ripped higher. So, is there still the potential of the idea that I spoke about occurring, and you know, Meta actually giving a deeper pullback? Apple's tough. Apple looks pretty good. Nvidia could still get wrecked on earnings potentially. You know, Google, Microsoft, and Amazon could weaken out further because and Tesla, because those charts don't look very good at all. Could that idea still play out and we get a loosening up of the market around OPEX? Sure, it could. But, you know, one step at a time, I would circle back to what I was saying when I was commenting on Dennis and Billy's comments, which is, if that's going to be the case, it's going to show it to us. So, you know, let's just wait for the actual signal to come in at this point after such a really strong day. Let's see how tomorrow's trading session goes. And then next week maybe has a little bit of a higher potential for us to start seeing some weakness just in terms of seasonality, but we'll see if it follows through. Cool, good stuff, Rich. From Ben, can you speak to maintaining the balance between swings and intraday cash flow when managing a smaller account size where risk is super tight? I don't think that you can do the cash flow strategy that I talk about with any consistency on a smaller account size. I think that you have to do more straightforward trading where you are finding your executions, putting in your stop loss at the appropriate spot, and then have a reward game plan in place that maximizes the reward potential. You just can't really take enough size to do the, you know, like here's my Palantir executions today, just because it happens to be up on my other screen. What the hell is going on? Oh, that's weird. Accidentally had it up. You know, you can't. I don't think you can just work the position back and forth with that kind of cash flow strategy if you don't have enough size to be able to, in my case, because it's a short, be buying all the way down and then re-shorting on the way up and then buying on the way down. You just can't do that. You just, it's too much risk. So you have to just, you know, find your execution point and trade versus it and get stopped out or get paid on the trade. Last 3 weeks of big tech earnings is the growth scare harbinger. Yeah, I definitely think that there's some concerns. I mean, I said it back in January that if Mag 7 continues to spend the way they're spending and they don't see revenue from it, it could lead to a big problem. We saw that, I think, a little bit with this with these tech reports and how the stocks are traded after. But, you know, they're just rotating into everything else, right? I brought up all those other names. You know, Spotify, and they're buying Palantir, and they're buying Spotify, and they're buying Docs, and they're buying Net, and they're buying CrowdStrike's at all-time highs. Anyone remember just how many months ago it was when CrowdStrike caused a national catastrophe? Well, now look at CrowdStrike, all-time highs. So that's what dispersion is, and that's what rotation is. So at least for the moment, you could make a good argument, I think, that Mag 7 reports are the canary in the coal mine, and that the rate of ascent of CrowdStrike at $453 is unsustainable, and this is going to lead to a blow off top in these types of names, and everything's going to sell down together. I think it's a valid argument to make, but you know, I would just keep circling back to what I said. The index looks good. The index is breaking out. Know your downside levels. If the concept is correct, then you're going to lose those levels and you'll be able to execute the shorts. All right, so the VTF. Let's see what's going on over in the YouTube. I haven't pulled it up yet today. There we go. From Plasma Lab, Tesla had a 130% rally from October 21st to December 16th. October lows to December highs. 130%, not bad. Now it's retraced 33% of that move. That seems like pretty normal price action so far for a market leader. Why do you hate the stock? Um, is there any other reason? Is there any reasons other than your obviously political bias? Polls show that the vast majority of the American people don't agree with you on your political take. So I don't talk about my political take. Um, so I don't talk about my political take. So that's the first thing I would say about that. I talk about how I feel information that affects the market actually affects the market, and I'm really a kind of a stickler on that. I get a little bit pissed off when people talk about politics in the virtual trading floor on either side. I don't like Tesla, not necessarily because of Elon Musk's relationship to Donald Trump. I think that what you just said is very valid. 33% pullback of an initial move could create a support zone that could cause the stock to snap back. Technically, it's the weakest of the Mag 7 stocks. That is an objective fact recently, right? If you go through all the Mag 7 stocks, which I've done many times now, this is the only one that's broken down through major support levels so far. Everything else, I guess NVIDIA broke through 130, but now it's back above 130. Everything else is holding their major support levels, or if they have lost them, they're back above them, with the exception of Tesla. Tesla, the major support level that we have been looking at is $375. So that is one. So technically, the stock just doesn't look good to me. If it recaptures 375, I'm going to call it 375 to 380. If it gets back above there, then I think that the bullishness of the stock returns. It'll start looking significantly better. For the moment, I think that there's an opportunity for a retest of previous support to act as resistance and cause the stock to fade down. On top of that, fundamentally, Tesla's business, the car business itself, from what I've seen, has actually gotten worse over the course of the period of time that you're discussing. But the stock has moved higher for a number of reasons. One is because of a degree of people betting that Tesla is going to be the leader in fully autonomous robo-taxis. Two is because of them that they're going to become a leader in AI. Three is because they're going to become a leader in robotics. None of that, from my knowledge, has generated any revenue pretty much at all yet. It's just something that they're working on, and it's to be seen whether or not they're going to become successful. On the robo-taxi stuff, I would actually argue that Uber is doing a better job than Tesla is, because Uber has partnered with Waymo, and when people hail rides, they do it through Uber. They don't. There's no Tesla ride-hailing app yet that I'm aware of. So I think that they're actually losing that race as well. And on top of that, the final main reason why the stock moved higher as well as it did was because of his relationship to Donald Trump. But I don't see that translating into the bottom line. Now, it does get a little bit tricky sometimes. I do my best to not be political because being political doesn't make anybody any money. But it's hard sometimes, especially with like me taking a stance that tariffs are bad for markets and bad for the economy has nothing at all to do with my thoughts or feelings about Donald Trump. As an example, so when it comes to Tesla, I actually see a business that's deteriorating because he's alienating a lot of his customers. What I see when it comes to the electric car business is, and again, this is not a political statement, and you feel free to disagree with my logic or my thought process. I encourage people to do that. I change my mind all the time. I'm always open to other pieces of information and viewpoints. But what I see is that the people who primarily want to buy electric vehicles tend to be people who are more left-leaning, yet anyone I know who is left-leaning at this point won't have anything to do with buying a Tesla vehicle. And the people that I know who are on the right, and I live in Idaho, I know people who are on the right. I think I get great perspectives by living in New York for half the year and living in Idaho for half the year. The people I know out here are like, what are you kidding? I'm not buying an electric car. I want gas. I want, good old fashioned muscle. So they're not buying the car either. And then what you're starting to see is this huge deterioration of Tesla sales numbers coming out of Europe. So that's obviously not great. Um, those numbers out of France declined huge. There's language coming out of, I think, the German, I don't know, chancellor or whatever, that because Elon supported the far right candidate, that they are going to create negative repercussions against Tesla for their battery manufacturing business that they have going on in Germany. So to me, I just see a whole ton of headwinds for a stock that got boosted up primarily on businesses that are very far out in the future, and because of his relationship to Donald Trump. And at the same time, I see a CEO who's not involved. I said it yesterday. I like some of the stuff, and I hope this isn't a political statement because I try not to be political, but I think we can all agree. If there's corruption in the government, if there's corruption in some of the things that Elon Musk and Donald Trump are talking about, whether it's treasuries or benefits or whatever, and they can eliminate corruption, I am all for eliminating corruption. I am all for, if Elon Musk is able to find all these ways in which people have been ripping off the government and stops it. I am all for that. But if I was a Tesla shareholder, I'd be like, why is my CEO, like, sure, it's great for America and great for humanity if he, is able to get rid of corruption, but he's not concentrating on my company. I need him to be concentrating on my company and taking my company to the next level, and not making fake bids for OpenAI that are basically unrealistic just because I've got a tiff with the guy who runs it. Like that's not how I want my CEO to be running the company that I'm a shareholder of. So again, I'm trying not to be political at all on any of this. That is the facts as I see them in the creation of a business that's potentially deteriorating, that has bad technicals, that broke through support levels. I could be completely wrong. They could be the leader of robotics. They could be the leader of robotaxis. He's got other levers that he could pull too. It's not outside the realm of possibility. Remember what he did with what was it, Solar City, the solar company that wasn't doing very well, that I think his brother was the CEO of or owner of or whatever. He just absorbed it. There's huge value add if there's some scheme down the future that combines Tesla with SpaceX and Starlink. Because forget Tesla, the business that I want to own if I were to own any Elon Musk businesses is Starlink. It's the space business. Those are the businesses. That Starlink business, I mean, has been incredible and is continuing to expand. SpaceX. This is a business, Tesla, that I see is deteriorating, losing support levels. So that's just my thought process in a stock that is acting relatively weak and lost a huge support level. It is not meant to be a political statement. I do my best as much as possible, and it is hard sometimes to keep everything as apolitical as possible. I absolutely have my opinions, but I don't want my opinions on politics don't make anybody money. All I'm here for is to make people money. And guess what? I crushed Tesla short. And guess what? I was also long Tesla in October and November and caught some of that ride up. I had a great, I don't remember exactly where it was, but I had a couple great swing longs in Tesla on that ride up. And then I absolutely crushed the short side. We crushed this parabolic move, crushed the lower high. I remember reshorting, 450 something or whatever. And I think I even crushed this third lower high when it came in. I think I had 3 shorts down to 400 or below 400 that all paid me really well. And then I was just kicking myself that I wasn't even more greedy with a more greedy, larger game plan to make even more money when the support level itself actually broke. I didn't short the breakdown. And now I'm just eyeing this stock. I would have more conviction in the Tesla reshort into that 375 area if the market was confirming it. And as we just discussed, the market's starting to not confirm it. So I like to trade in the direction of the market first and foremost, and then have my trades play off from there. So I appreciate the question, sort of. I do my best to be an open book about trading, but I think that trying to say I have an obvious political bias is wrong. Are the Qs overextended alongside? No. Oh, they're getting there, actually. The ADMA is going to catch up probably to 5. Nah, yeah, we're not that extended. The ADMA will probably be close to 530 tomorrow, which means that we wouldn't be at extreme extension unless we were at QQQ 540. So I think you need more than just a little gap up. You need like a gap up plus a move. And then I'll always be a little nervous to do that aggressively on a Friday in front of a 3-day weekend. We have seen several weak Fridays in a row. I would just note that. It doesn't mean we have to tomorrow, but we have seen several weak Fridays in a row. From Giancarlo, do you take into consideration moving average crossovers as bullish or bearish? Regarding Tesla, for example, bearish because the ADMA crossed the 21 EMA, and especially the ADMA below the 50 EMA. No, I don't do a lot with moving average crossovers. I do pay attention to it because moving averages crossing over each other can be part of a reversal process. So, you know, I pay attention to like, oh, the market weakened out enough where those moving averages are crossing back down. But to me, it's never like a buy or a sell signal that two squiggly lines are overlapping one another. And you can really hurt yourself, especially in like a range-bound market where they, you know, continuously cross back and forth over one another, because that's what happens in ranges. So I don't pay too much attention to that. You know, for me, it's more a matter of where is price action trading versus where those moving averages are, especially when we're talking about those smaller EMAs like an 8 and 21 EMA. On the bigger time frames, I do like to pay attention to 20, 50, and 200 SMA. But you know, that's more for essence of trend. Like in this chart, I only have a 200 SMA. It's rising. So that means that the essence of trend on the long time frame is higher. So big picture, I would rather be long than short, broadly speaking, is what that says. All right, cool. I am going to wrap things up there. I think I got through just about all the questions and comments. So that'll be it. Have a great night, everybody. I'll see you all tomorrow where we will wrap up what has felt like a long week of trading. And if you're on the YouTube, give me the thumbs up and tell all your friends.